move on now to role players in the debt consolidation space seeking to demystify misconceptions about this process. It comes as the number of indebted consumers continues to rise. Scores are battling the ongoing rise in the cost of living, and analysts say debt consolidation can lead to better control and financial relief. FNB Home Loan CEO MJ Davies joins us now for this discussion. Thank you so much for your time, MJ. It really is one of those situations in South Africa where indebted consumers find themselves seeking such avenues. Are we seeing a large number of indebted consumers taking this route?
Good morning. I think we have seen over the last 18 months as interest rates have increased, close to 5%, that more customers are taking strain in their monthly budget. So we are seeing more customers exploring debt consolidation. It does help, reduce your monthly fees, and it can also help with, reducing your monthly credit commitments. But we always say to customers, first look at ways to optimize your monthly budget. Are there some luxuries you can cut out? Are there some spending you can sort of delay for a few months before you consider debt consolidation? But if you need the monthly cash flow unlock, then it's definitely a very good option for lots of consumers.
Now, let's talk about some of the misconceptions around debt consolidation. What are they?
Well, there's three main ones, we tend to focus on. The first one is that it's, taking out a debt consolidation product or loan will negatively impact your credit bureau. While it will leave a credit bureau inquiry, debt consolidation is like any other new credit agreement you take out with any credit provider. So it's not seen as anything different from a credit bureau perspective. The second myth is that it will sort of adversely impact your credit record or cause you to be blacklisted. That's not the case. It's treated the same as any other credit agreement. And as long as you pay it well and pay it on time, it can actually improve your credit score over time. The third myth that we tend to see in the market is that it will decrease the amount of debt you owe. It doesn't do that. What it effectively does is extend the term. So it gives you some payment relief, but you still repay the full amount of capital you owe your various credit providers.
Now, would all those, including the latter, maybe have a con to it, especially with regards to the elongated manner in which one would be agreeing to paying their loans for longer?
Yeah, so that is the one thing we advise our customers to look out for. So any product where you're extending the term to help free up some monthly cash flow will likely mean that over that extra 12 or 24 months you choose to repay your loan, your total repayment is going to be more. We refer to it as your total cost of credit. It's a sort of number that all credit agreements need to show customers. So look out for that. Make sure you're happy to pay that extra amount. But I think what's also really important and for consumers to note is, most debt consolidation agreements are in the form of unsecured personal loans. And one of the nice product features of this product is there are no early settlement fees. So if you come into a windfall, if you're lucky enough to get an annual bonus in December, you can put that money towards your debt consolidation agreement and settle it early, so that you don't pay it for a full term and then have the impact of paying interest over a much longer term. So always advise our customers, if you can settle the loan as quickly as possible, then you're going to reduce your total cost of credit.
As a parting shot, what would not work in this particular process when it comes to debt consolidation with an individual who simply can't even afford that too?
Yeah. So there's another, myth in the industry. People often confuse debt consolidation with debt review or debt counseling. And I think, we also have seen lots of advertising in the market around, debt counseling being sort of shown as debt consolidation. So debt review is a formalized process. It goes through the courts. And we see that as where customers can't make debt consolidation work, but even that monthly relief is not enough. Going under debt review with a good debt counselor who will negotiate on your behalf is generally a very viable viable outcome for those customers. It is more severe. It's a much more formal process, and while you're under debt review, you can't access any new credit. You definitely have an impaired credit record. But for a lot of consumers, where debt consolidation will not work, they've tried all other options, they've chatted to their credit providers first, and they can't come to an arrangement, then, pursuing the debt review route is a good idea.
Thank you so much for your insights. FNB Home Loan CEO MJ Davis there speaking to us about demystifying the misconceptions that exist around debt consolidation.